All right, welcome back everyone to this week's portfolio update where you guys get transparency into my investing journey. In this episode, we're going to talk about true investing, what investing really is like. So sometimes investing can be really glorious, and we've seen that in previous episodes. We've seen that with Tesla, with Lemonade, with selling covered calls and covered puts and making $1,000 a week. And other times it can be really boring. And I just want to put it out there that it's okay to have investing get boring sometimes. It's okay to only invest boring amounts of money. It's okay to be invested in what are now boring companies. So, looking at this week here, we've seen that I'm down $2,000. So the $394 I was up last week, I'm now down way more. And to be honest, I really want my viewers not to ever lose sleep over this, right? This chart, let's make fun of it for a little bit. It kind of looks like a heartbeat, and then this person had a bit of a heart attack, and now they're back, and so on and so forth. So the markets can be really crazy. The markets are super bipolar, and what will set you apart from an investor that loses money versus one that gains money is your temperament. How patient can you be? How much do you believe in your investments? How well can you fight the FUD? How well can you fight the fear out there and the misinformation, right? Because weeks like this can really make you question if your investment does work. Like with Tesla, I know some of you have been holding Tesla and you were very much aware that it went down quite a bit this week. So we see that Tesla went down to 788. Now, if you're smart and you were buying at this level, God bless you. I didn't wake up that early, but I was buying around this level right here. So I joined you afterwards. But let's say you bought up here because you were watching my YouTube videos and now you saw it crash. Like that can make anyone start to question whether that was a smart decision or not. And I think that it's up to the person on how much that they believe and how much that they have really confidence in the company, confidence in what's going on. And Tesla's one of the investments for me where I have full confidence. Like if I have $1 million and I was lazy, I'd put it on Tesla right now, liquidly split. And as I was saying in the other videos before, these types of movements in the stock market where it doesn't really go anywhere usually are followed up by violent movements upwards. And the longer it keeps going like this, the more you're patient during these choppy waters, as I like to call them, the more you'll be rewarded in the end. Like, let us not forget that Tesla was literally choppy water sideways, and then it blew up like crazy. So if you're patient in the stock market, you can get rewarded with a lot of monies. Also, a little tidbit of gold is that if you have 100 shares of a company, obviously Tesla's not a good example, so let's go over to something a bit more reasonable here. Let's say that, for example, let me just go over to a cheap stock, Dropbox. Let's go over to Dropbox. All right, so now that we're looking at Dropbox, let's say that you have 100 shares of Dropbox, which is only roughly $2,500. If it's trading sideways, you can still make money on it by selling covered calls on it. Just make sure that you pick a price that you're comfortable parting your shares with. And I would recommend selling weekly, so every single week you sell the call. And you really want to sell it like for a strike price that's pretty high, and you can make $35 each week for every 100 shares, and that starts adding up over the long term. It's kind of like a dividend that you get every single week. It was nice to see Lemonade recover, and I really think that the whole genomic space, guys, like I'm telling you this right now, right? This is something that I'm going to be putting my money where my mouth is. The genomic space right now, I see it where is the same place where Tesla was 5 years ago. Meaning that there's so many people out there that don't understand what genomics is. They don't know how to like interpret it or how to value it. And I'm just seeing like with each person I talk to, with each person being like a doubter, that makes me way more bullish on this. So if you guys feel like you missed out on Tesla, obviously Tesla, it's still not too late. I think the company could realistically go to $40 trillion. That's a 50x increase from here over the next 10 years. So each year that's like a 5x increase. That's pretty good. No bank account's giving you that, and it's pretty safe in my opinion. If you feel like you've missed out on that, don't worry, because if you rock with me, the genomic space, maybe not necessarily ARKG, but some of the companies in there like CRISPR, Invita, those types of companies, Editas, they will make you multi-millionaires. If you just put $10,000 right now or even $100, those companies are going to go up way more, maybe even more than Tesla, right? So it's crazy to think like that, but genomics has a full capacity, and you just need to be patient. So you need to wait for 5 to 10 years, and I promise you can buy the biggest mansion you would want with that money. I would definitely be buying more ARKG, not in Robinhood, but in Fidelity, and I'm still waiting for the transfer to go through. It's taking forever. Fingers crossed fingers crossed that by the end of this month, I could finally start trading on Fidelity and show you guys how Fidelity works and all that. But for now, we're just sticking to Robinhood, not buying any stocks, but just looking at our positions on Robinhood. That it's okay to only invest $10, $100, $1, 50 cents. Whatever you guys can afford to invest, just invest. I always like the saying that, let's say that you realistically, like, you're doing everything in your power and you can only afford to save $100 each month, meaning that you were eating ramen noodles and canned beans, you live in your car, you work all the hours you need to work, and for whatever reason, you still have $100 of like profit left over to invest. That's okay, as long as you are doing your absolute best. You may not have to go live in your car or eat ramen noodles and beans. That's just a crazy example. But let's say that you can save $500. You can stop going out as much. Maybe cancel a couple subscriptions here. You know, maybe move in with a couple friends to bring down your rent. Maybe apply for scholarships.Maybe get a better job. You know, Uber is a great way to make money. I literally just made like $200 today, working like 6 hours only doing Uber and Instacart. It was great. So I'll put my link down below, but point is, guys, just don't be ashamed of only being able to invest small amounts of money. It's cool to invest small amounts of money. What isn't cool is not getting started, right? I want to tell you guys something. My first investment that I ever did was on General Electric. General Electric was my first investment that I ever did. And I only put down $50 in the General Electric. So we're talking about a portfolio that literally is, you know, crazy high right now. Like, I've come a long way. I started out with $50. So the point is that it doesn't matter where you are starting out now. What matters is where you're going to be next year, 2 years, 10 years down the line. That's all that really matters. So anyways, guys, thank you for watching this short little video. I hope that this gives you faith and confidence in yourself to not only keep waiting and have patience, but also a few little tricks like selling covered costs to make money while the market goes sideways. So thank you all for watching and have a good night.